Hi there, I'm Champion Trader Kevin Davey, and today in this video I'm going to build a simple crude oil algo, and I'm going to talk about it a little bit. So let's get started. Here we go. A simple but effective crude oil algo. Here's a sneak peek on what it looks like, where it was developed in the area in white up until 2021, the end of it, and in 2022 was out of sample real-time results. So this has been a pretty profitable strategy. Not perfect, it has drawdowns, good strategies always do, but it's a pretty decent strategy. Now let's back up, and it said, well, hey, this is a simple algo. What's an algo anyways? For those of you who might not know it, an algo is just buy and sell rules that can be programmed and tested with trading software. So use something like TradeStation or MultiCharts or NinjaTrader, and there's a bunch of different things. You can use Python. All different types of software can program the rules. You test it, you historically test it, and see which strategies work the best, and that's an algo. That by itself is pretty simple. Obviously, it can get complicated with what you develop, but the whole concept is just buy and sell rules that are computerized. Here's an example. You buy if the highest high of the last 10 bars is hit, and you sell short if the lowest low of the last 10 bars is hit. That's an algo. That is a complete trading strategy by itself. Now, I'm not going to tell you it works good or not, because you'd have to test it. But it's something that controls when you get in and when you get out of the market. So that's an algo. That's all an algo is. That's all we're talking about here. Way back when, it used to be known as mechanical trading, systematic trading, or rules-based trading. Today, everybody calls it algo trading. It sounds cooler. Okay, with that in mind, here's today's algo. I like strategies where I can write down on a cocktail napkin what it does. That keeps it simple. So here, I'm writing it down on a cocktail napkin. To go short, I want a long-term uptrend, a medium-term downtrend, and a short-term uptrend, with today being down. And if all that happens, then I go short. So it's kind of a pullback type system, and you'll see that in one of the charts I'm going to show here. The rules, more detail on the rules. You want a long-term uptrend. This is kind of a contrarian measure, because you'd think of uptrend, you want to go long. I'm going short. It's measured by the 200 bar momentum. And then the medium trend, I'm going to do an optimized somewhere around 20 bars momentum. That's going to be down. So your long-term trend's up, your medium trend's down, your short-term trend's up. So that's like the pullback part. And that's going to be a very short-term, like around a 3-bar momentum, somewhere in that range. And today is down. So even though that short-term trend's up, you've had some weakness, it's down, that's a good time to go short. So let's just see how that works on a sample trade. This is crude oil daily bars. And if I look at like the 200 bar momentum, that's the line 1, and you can see that's up. Not up a ton, but I just said it has the close today has to be greater than the close 200 bars ago. That is satisfied with 1. Number 2, you want a medium term, about 20 bars, downtrend, okay, compared to today. There you go. Number 3, you want a short term, very short term, uptrend. That's noted by number 3. And then number 4 is kind of hard to see here, but you want the signal bar to be a down bar. And then that's meaning the open is higher than the close. So it closes down, and that's when you go short. So I go short right where it says short here. That's a sample trade with this. Looking at the code in TradeStation format, here it is for the entries, for the buy and the sell short. You can see it's just what I described. I also want to point out that it's all ands. It's not ors, it's all ands, meaning all those things have to happen. And if you're buying, you first exit any short, and if you're short, you first exit any long. So that's how that works. And again, it's symmetrical. If you were long, you go short. If you were short, you go long. That's the reversal part. And the symmetry is exactly the opposite for both. You know, you can see that with all the less than signs become greater than to do the opposite. Then exits, I don't have any special exit other than the entry being an exit, except for I'm exiting after 10 bars. Regardless of profit, regardless of loss, it just exits. And you might say, well, why are you doing that? Well, the one cool thing that I've seen over the years is signals don't last forever. And a lot of signals just have a certain time frame. So I said, well, hey, 10 bars on a daily chart, that's 2 weeks. I don't expect this kind of pattern to hold up past 2 weeks. If it holds up 2 weeks, I'm out. And that's what you do here. You exit after 10 bars after you enter. And again, like I said, many of the signals work for short time periods. I had 2 inputs that I optimized, 28 iterations, and here are the results. So it's a pretty decent system. Not perfect. You might want to do some work on your own, at least watch it in real time before you go trade it. But it's a simple system, and it seems to work pretty well for crude oil. Thanks for watching. I'm Champion Trader Kevin Davey. Have a great day.